All right, guys, welcome back to the Anthony Lee Crypto Channel. We are live. It is FOMC time, and Bitcoin getting a little pump beforehand. We know, of course, this is kind of meaningless. We are waiting. We're looking for trades today. I've got things marked out for you guys, but we're just kind of waiting right now. We're just kind of waiting, letting folks get in here. We'll see how things are shaping up as the report comes out, and more importantly, as Jerome comes out and does his spiel. So, what we got going on in the chat here? We got Hawkborn, Max, pump time. Yeah, pump time. I like it. Salt Chain, how are you? 001 Sequoia, dropping the language. We like it. Keyboard Warrior, got one of those in the house. Cat says, hey, crypto fam. John welcomes Cat. All right, guys. Hope you caught the live stream earlier this morning. We took a trade live. I gave it to you. I closed that trade out. It was a long. I kind of wish I hadn't have, but things were getting a little squirrely, so I closed it out. We made about $200. So not too terrible. Not too terrible. It's not what we're looking for. It's not the trade we're looking for. I was just trying to make a little something happen this morning. Made a couple $100. We're up $1,900 on the day, though, guys. Given all of these trades in advance to my VIP Discord. All right. Wanting to know if Jerome is going to be hawkish today, guys. What do you think? Is he going to be hawkish? Let us know. Here comes the poll. I want to know if he's going to be hawkish. I want to know what you think. Let me know. So going into FOMC, we got about a 90% chance that they're going to cut 25 basis points. Okay, as far as I know, we could go back in the annals of time, but I don't think this metric has ever been wrong. Certainly not when it's overwhelmingly one-sided like this. So we're expecting a rate cut. So that's pretty much priced in. We don't expect too much price movement from the actual report unless they don't cut, because it's priced in for cut. So if they don't cut, this thing's going to tank and tank hard. What really matters is going to be the press conference afterwards. And we talked about this on the live stream this morning. Powell, and despite your politics, it doesn't really matter to me. I don't care what you think. He is in a pissing contest with Donald J. Trump. So Trump wants rates cut. Powell, I don't know if he wants them cut or doesn't, but he wants whatever the opposite of Trump is. And therefore, he is liable to come out hawkish, even if he doesn't believe what he's saying, just because they're in this ridiculous high school pissing contest. So I wouldn't be surprised to see a little dumpola here, but that's okay. It doesn't really matter. What this day is about, as far as we're concerned, trading is waiting for the first move, finding a level of support or resistance, depending on which way they go, and trading it back the opposite direction. And we're going to take a look. So we're priced in a rate cut here, but let's look forward to next month at January and see. So if they go to 375 today, which is the expectation, for next month, the target is 375 also. So the expectation at 68.5% is to keep the rates the same and no cut, no increase next week. Just keep it the same, okay? So that's what's being priced in right now. No rate cuts for January. So if he comes out today and is dovish, if by chance he has finally smelled the roses and he is going to be dovish, then you can expect to see price pump today as they start pricing in a rate cut for January, because as of now, there's only a 23% chance of that, so it is not priced in. So a dovish Powell today would be really good for upwards momentum for all of you longers out there. We don't really care one way or the other here. We're going to make money whether it goes up or down. Did you guys catch that trade yesterday, the big long? I know we talked about this morning on the live stream. Sequoia says hawkish cut. Yeah, I agree. I think it's going to be a hawkish cut. followed by Chair Scalp driving some uncertainty in the press conference. You know how it is. He's going to come out, say his little pre-made little spiel that he says every single time. And so for those of you who this is your first press conference, the first 5 minutes of what he says doesn't matter. It's the same thing every single month, no matter what. What matters after that, he opens up the floor for Q&A. And sometimes there he'll lean one way or the other a little bit. He never directly comes out and says, screw you guys, we're not cutting. But you'll be able to discern based upon his tone what he thinks. And that could change throughout the next month as reports come in. But we're going to wait for that Q&A section. That's what really, really, really matters. But anyways, did you guys catch the big, massive pump yesterday? It's like a $4,000 pump in, about an hour? We were on the live stream. We go live every Monday through Friday for the U.S. market open. And we went live yesterday, guys. Let me flip over to the Discord. You can join my Discord, free or VIP Discord. I give all my live trade setups. But I think I posted the screenshot of it yesterday. Yeah, this is a poorly drawn upwards arrow, but we took this short right here. This is U.S. market open. Quick pump when the JOLTS jobs report come out right here. We took the short right there. We shorted it down here to the 618. We closed this trade out, and I told y'all we were fixing to rip. So the long back up to the top to the tune of about $4,000. Given live on stream, guys, right here. So check us out in the mornings. Go ahead and subscribe to the channel now while you're here. We have some indicators. I've created indicators too we'll be using today if this is your first time. They're private indicators. They're only available to the Anthony Lee Crypto crew, and you can get them by subscribing to the Discord. Even the free Discord, you'll have access to those. See what we got going in here. Dagbjorn's back. Dag, what's up? Took profit way too soon yesterday. John, come on, man. We talked about that. That's all right. I took profit on the long trade. Remember, you guys, I was on a long trade this morning. I gave the short trade last night. I did a VIP private stream yesterday only to the VIP members, and I took this short, which I gave to you guys. I don't even remember what we made on this. About $2,000, I think. 34 ROI, about $2,000 you made on this. I walked you guys through this live on stream. I showed it live on stream, the private stream. So we had a big day yesterday, and we're up 1,900 on the day today and looking for more. Now, remember, guys, if you guys are going to trade this, we covered this morning. What we're looking for, and I've got some areas marked out. And I know this is a little jumbled. This is my chart, though. It is what it is. So I've got these shaded green and red boxes, and these are the target areas I'm looking for. I know there's 2 to the top and 2 to the downside, but it is what it is. If price gets going a little stronger one way or the other, we can look for the other box. And, of course, we got the extremes on both ends. I'm going to show you something in a minute, though, about where we're actually headed. Today's price action is very irrelevant, guys. I know a lot of people put a lot of weight on this, but I don't think these days have quite the impact on price as it used to. It does intraday. That's because so many people are out here long and short run. There's liquidity built up everywhere. They literally just like to do this boom, 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 and get everybody, okay? So we've got to be aware of that, and we've got to be sitting and waiting in one of these support or resistance zone to catch just one of these waves. That's all we want is one of those waves. And then they'll continue on price in the direction it was headed to begin with. That's how it goes. But today's just one of those days. It is what it is, and we're going to take advantage. We do every month. We take advantage of that. I want to show you something really cool in just a second, though. Let's see what else we got in here. Let me glance over at the VIP chat. Yeah. I don't have the hat on today. My hair's really short. I showed the picture this morning, guys. I used to have really long hair, like long hair. I cut it. I went to go get it trimmed, and the dude cut me like a mullet, and I was so mad. I just came home and shaved it. So, I mean, you know, it is what it is. I kind of tried to shape it up a little bit for about a month, and I just got so mad I just shaved it. Now I'm growing it back out. Let me see if I can find it for those of you new in here. Here we go. I had the hair. Look at that. It's true. So, from long hair to shaved. Now we're growing it back out. We'll figure it out when it gets to a different length somewhere along the way. No. Sorry, guys. We got the VIP chat going on in Discord too. No, I did not go to the gym today. It's so rare. I just got up and it was a big day, and I got in that trade early this morning at about 3:30 this morning, and I didn't go. I hate it. Normally I would have went afterwards, but we had this, and I had to go take care of some business. What time is it? All right, we got 9 minutes. Again, the report's going to come out. Let's take a look and see what happened last time we had the FOMC. It was on, I've highlighted it out. It was October the 29th. Let's scroll back to October 29th. We can kind of get a general idea what happened last time. That's in this big circle here. I've got the arrow pointed down to the exact time, 1 o'clock Central Time, of when the report dropped. We're on the hour time frame. Let's go down to the 15-minute time frame. Sorry, guys. I should have pulled this over already. Here we go. All right, so we're on the 15-minute time frame. We're going to look at exactly when the report dropped and exactly when Jerome came out. Jerome's scowl. I like that. Okay, so here's when the report dropped, right? First of all, let's take note. We were in a downtrend to begin with, right? These are the days leading up to a downtrend. So nothing changed. We got a 25 basis point cut, so same thing we're expecting today. He came out with the same nonsense. Nothing changed. We continued the downtrend. Note that nothing changed, okay? The only thing different is you got this big red candle right here when he started talking. This is exactly 1:30, 2:30 Eastern Time, 1:30 Central Time. I'm in Mississippi. We're on Central Time. We got this big candle as soon as he started talking. A little wick to the top, but big drop down, 2% drop to the downside. And then it bounced right back up to where it was before he started running his mouth, and then continued its merry way to the downside as part of this downtrend we were already in. Guys, I expect the exact same thing today, okay? And I'll show you why. I'm going to back this up with why I think that the only difference is we are in an uptrend, okay? So that's good news. So what we're kind of hoping for here is whatever happens with the port happens with the port. I don't really care. What I care about is when he starts talking, I'm hoping for a pullback, liquidate some of these longers, okay? We're going to be sitting lying in wait right here or right here. And when it comes in our area, we're going to long this thing up to $96,000, $97,000, okay? Now, it's not going to go there in one candle. It probably won't go to there today. It may take it up to a week to go there, or by the end of the week is what I'm hoping for. That's what I'm hoping for. Now, the market doesn't always give us what we're hoping for, so we have to be prepared for the flip side of the coin, too, which we have our targets here if it wants to come up first and then come liquidate, folks, and then it can continue on its way up later in the week. Well, Anthony, why do we think it's going up later in the week? Well, guys, I'm going to show you something really cool, okay? I don't know if, let me see. This is my Bjorn chart. I call it Bjorn. I'm going to look at the 10-day. Now, this is a setup, okay? This is a setup, and it is extremely powerful. Pretty much anything on the daily and up is extremely powerful, okay? We're on the 10-day, which is like uber powerful. I mean, they don't get much more powerful than this. This is it. So, price action up top, of course. Down in the middle section, this is BBWP. A lot of people don't know what this is. This is basically a measure of volatility, okay? Pay attention, guys. This is really, really good. Below that is stochastic, okay? So this orange line is the 15% mark on volatility, okay? Right? So when volatility comes below this 15% and kind of hangs out for a while, again, these are 10-day candles, so this is a good while. And it hangs out below here. This is the 10-day. It doesn't mean you're not volatile on like the daily. See, you've been volatile on the daily the whole time the 10-day was down low. And you still got this big, huge 30% drop to the downside while the 10-day was chilling out, okay? Right? Not even the powerful 10-day was moving. But when it comes back above the 15%, that's called expansion, volatility expansion. That means volatility is ramping up in a big kind of way, okay? That doesn't mean price is going up because it's going up. That means the price action is moving really fast, really aggressively in one way or the other, one direction or the other. How do we determine which direction? Well, we look down at stochastic, okay? Let's mark this out. Volatility crossed, officially right there. Boom. Okay, let's zoom in on stochastic down here. Okay, right there. Uh-oh, look at that. Stochastic just flipped bullish. Stochastic is headed to the upside. Not only is it headed to the upside, it is absolutely bottomed out. You see how low it is here? So there's a lot of room to run to the upside. With volatility headed up, stochastic momentum is headed to the upside. We're expecting a massive, and I mean massively big move to the upside, okay? Doesn't mean it happens today. This is a 10-day time frame. Could take weeks to play out. Let's look at last time. Last time stochastic was bottomed out, but more importantly, volatility contracted below the 15. Let's check this out. Contracted below the 15, then expanded, okay? You got the expansion. Let's follow it down. When you got expansion, boom. Stochastic bottomed out, had just flipped to the upside. What happened, guys? You got expansion on this candle right there. That's where you crossed the 15, this candle right here. You actually wicked to the downside a little, so that's cool, that's possible, but you then moved up 59%. Now that took some time. That took 18 bars times 10 days. That's 180 days. That's a while. Okay, that's a long time. But you moved up 60%. All right. Let's go back a little further. Okay. Right here, volatility expanded right here on this big green candle. Okay. Got volatility. Stochastic was pointing to the upside already. What happened, guys? What happened? Same thing, 58% this time, okay? This one took, well, I didn't get my days. Let me get my days. This one took 7 bars, so 70 days, a month and a half, 2.5 months. 2.5 months right there, okay? We got a 60% pump right there. We could go all day with this. Look at this right here, guys. Let's look at this one. Volatility contracted on the 10-day, finally expanded right here, okay? Finally get that expansion right here. Look, stochastic pointed to the upside, much less room to move to the upside. That didn't stop it. We got it on this white candle right here. Look at that. Before you kind of started going sideways, 115%. That didn't include the continuation where you came down and went back up on this next one. 115%, guys. We're there right now. Volatility just expanded on this last candle, guys. And you can already see we've already gotten a move up here. Really not a whole big move up here. We're just a few percent. I mean, of course, you had the wick down. We're a few percent up. But just imagine what's coming over the next couple of months. This is the bounce. Now, I do think, I'll be the first to tell you, I do think the bull run is over for Bitcoin. I think the top is in. I think you'll get a retrace up here, probably about 116K, at least to the top of this range at 113, 114K. But that's okay. This is headed up while this is going to be some of you altcoin guys here. While dominance is headed down, guys. Dominance headed down. It's broken this multi-year channel, headed down. So if we get this Bitcoin pump based upon volatility, while dominance is still coming down, your altcoins are fixing to absolutely rip. I do think we're fixing to get the alt season. I don't think it's going to be as prolific as years past, but I do think it's coming. I think January is going to be a big month for, first of all, the rest of December and into January. Big month for altcoins. Okay, let's look. We got the report coming out here in 45 seconds. 45 seconds. You may get some moves here one way or the other when the report drops, and that is nothing more than people getting liquidated. We're not interested. We are way more interested in when Jerome talks. Salt chain, hope you're right about the alts. I think I'm right about the alts. There are more metrics on the Bitcoin chart that show me we're fixing to go up, but that is the most reliable, most powerful one, and it's a good one, and probably nobody else is showing you that. All right, here we go in 5. Bitcoin moving to the upside. Yeah, we got the quarter basis point drop, guys. There you go. Put it on the screen here. We got it. Quarter. Forecast 3.75. It met expectation. We got 3.75. So just like expected. Just like expected. I doubt. I'll close that out. I doubt it's updated for next month yet. No, still right there about 70%. So this will update after Jerome talks. But we are moving to the upside. That's cool. It's a no trade for us, guys. It's no trade. This thing will come back. Faux show. Although if we get up into one of our boxes here in just a moment, we could look for some divergences and possibly take a trade. But this is a no trade for me. We haven't even taken this liquidity spike here yet. We at least got to come into our box here. I mean, look how jumpy it is, guys. Look at this. Look at this. Look how jumpy. We're on the 1 minute chart. Look at this. I know some of you, we were commenting in the on the live stream earlier, and this is your first ever FOMC. Look at that. It's ridiculous. This is why you don't front run these things. Do you get lucky every once in a while? Sure, you got 50-50 shot, but it doesn't always work out. Let it calm down for a little bit. If it does come into our box now, I will look to take a trade. I'll see if we have reaction that we're looking for, and we could possibly take a trade there, guys. Yeah, Max, 10-day chart's awesome. It's really cool. I'm telling you guys, it's really, really cool. Coming back down. We should, at some point in time when he starts talking, guys. I know it's kind of boring right now. Not much going on. I mean, this was pretty cool to see this spike. You could have grabbed the SFP here. It's just not the one we want. We want the bigger trade. This is a great scalp, guys, and we scalp every day, Monday through Friday. You know that. I'm all about some scalp trades, but it's not what I want for this report, for this press conference. So I didn't take it. This is a good one, though. I mean, this is, you got 1 minute bear divs here. You SFP'd, coming back down. The goal is the low, so you should come swoop both of these. There it is. There's your TP. Winning trade. No problem. All day long. Coming to the 618 there, but you've already tapped the 618, so it's already mitigated. I don't expect it to hold up much. You are getting a point of control here. If anything, that's where you're finding support. Got the point of control of this range that we're in, but I still want lower. You haven't taken this wick here or this wick to the top side. I want one of those to go before I even consider a trade. And you see how fast it's happening, guys? For those of you who aren't very experienced, I mean, you can't even get your stop losses set hardly. You can't even get your take profits before it's just ding, 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 ding. And I promise you, if you are in a trade and you're not market ordering, then you are getting slippage majorly. So whatever you got your prices set at are not going to get hit. You're going to get screwed somehow through slippage. Somebody tell me something good. Somebody tell me something good. What do we got going? Dagbort. Iceland, right? Right? Let's see. Uh-oh. Cat says, wow, this is crazy. This is my first time doing this. Yeah, this is crazy. This is nothing, though. I mean, this is cool. But back in the day, back in the COVID day, when interest rates were, and inflation numbers were just ridiculous. I mean, it would be nothing to get a 1 minute candle that moved $4,000. I mean, just both ways. It would be nothing. Yeah, Dagbort on Iceland. Over there with my boy in the mountain. These are pretty mild moves compared to what it was a few years ago. How long ago was COVID? Gosh, that's been 6 years ago. 5, 6 years ago. Find a little support at the point of control here. I really hope, guys. I know a lot of you can only make money if price goes up. I get it. I have altcoin bags too, so we need Bitcoin to do well. But I'm telling you, we would have a much better move up if we could come grab a little bit of this liquidity first. So don't be afraid. And what difference is it going to make for you if we get like, a 1 hour candle down here and then rip to the upside? That's 1 hour of your life that price went down for a much more effective move. I get it. I'm not making fun of you. I used to be the same way. But FOMC is just one of those days. What time did you say Powell was talking? He is talking in 23 minutes. And we'll play that live here. And we'll make fun of him a little bit. His pre-scripted little speech. Every once in a while they can get him to slip up and say something when they do the Q&A though. That's what we're really interested in. That's when you're really going to see the price start to shake and bake, is when he does the Q&A section. Guys, this is my indicator down at the bottom. For those of you new, it looks like a more popular one, but this is called Wave Cipher B. Does the exact same thing. Nothing wrong with the other one. It's just busy. It's busy, and this simplifies everything for you. I put out a whole video on how to use this right here on my page that you're going to subscribe to right now. Best free indicator. You can get this free by subscribing to the page and then joining my free or VIP Discord. You will get this indicator plus all my other indicators for free, but they're not available to the public. You have to be in there. I've simplified it. It is so simple, it's not even funny. And in the whole video, I walked through this live yesterday on how simple it was, and we took a trade and made, what did we make, guys? 1,700 on that trade? I don't even remember. They run together. But I walked you right through it. Thanos, we definitely will. Thanos, that Lionheart, brother, did you take TP? I hope so. I know where your entry was, so if you got stopped out on profit like we talked about, even if you re-entered now, you're in a $1,000 better position than you were before. So I hope you see what I meant when I said it's better to just stop out and profit if this thing starts reversing and then find a better entry. That trade is still going to play out. I'm looking for it. I'm going to enter it heavily today. Matter of fact, I've got loaded up right now, guys. By the way, I'm on MEXC. I got the link in the description of the video with the lowest rate, and you get a free $30 plus some bonuses for following my link. But I am on, right now, I'm on Phemex, guys. I've got this account, the usual $5,000 trading account. I'm probably going to go 20x leverage because this is volatile. Normally, I might go 44x here, but we're going to load up the old $5,000 account. If I really get frisky, I've got up here at the top, the secondary. If I really get froggy, I'll go onto the DGen account that I have here. We'll throw about 20 grand on it and see what happens. But this main one, this is my conservative one that I just like to trade with. Take profits, move it over to this profit category here I got on the top left, and don't touch those anymore. And I always keep this 5,000. That's the strategy that's worked for me. Because y'all know I've done some ridiculous $100,000 things on 50x leverage before with $5 million trades. So to prevent me from doing that, I have to find a little bit of structure myself sometimes. You can get on a streak, guys, sometimes where you guys in my Discord, you know I won, and I'm not bragging, I won 33 trades in a row. And then one day last week or the week before, I can't remember, I lost a trade. I lost a trade that I never should have been in. But when you win that many in a row, and I'm not bragging, but you get cocky with it. You get reckless. You get, I'm up, 25 grand. What difference does it make if I go lose 1,000? And that's just bad mentality. But the best of us do it. The very best do it. It's hard not to. Because when you're on a hot streak, you're on a hot streak. And it's not a bad thing. You have to ride that streak. But you have to recognize it when you're starting to get reckless with it and take a step back. And that's what I did. And I've done it many a times, and I'll do it again. Thanos stopped at entry or slightly higher. Oh, no, man, we were way... Oh, yeah, I remember your entry. Yeah, you weren't that far up. Well, good. we're going to get back in. You definitely need to get back in. Well, and let me say, I'm definitely getting back in. AFAC, DGN, that's my everyday account. Yeah. Listen, I'm a bit of a gambler, guys. So what I do is I have a main account. That's what we do. We do our money. We make our money. We do the regular thing. And then, but when I'm starting to feel froggy and I just want to go gamble, basically, and it doesn't matter. I mean, that's one of those YOLO accounts. You only live once. When it doesn't matter if I win or lose it, I'll go in that DGN account and I'll put that son of a bitch on 100x leverage and let it ride. That's what it's there for. You just to get it out of your system every now and then. You have to. I have to anyway. So just kind of trading in this little mini range we've been in all day, guys. Let's go to a lower time frame and see what it looks like. Although the problem with today is traditional TA doesn't matter. Look, you got bull divs right here. Bull divs. But this thing's just not going anywhere because it's FOMC, where as a normal day, look at this. Beautiful. Simple, easy. You got lower lows, higher lows of momentum, retracement down to the golden pockets, reclaim the POC, long trade all day long. Target, take out the highs. Boom, all day long. All day long. W reversal pattern right into the golden pocket with bull divs on the 15-minute time frame. All day long. What is this? Even if you just took it from the POC because you weren't confident to take out the high, that's a 3% move. Throw on some leverage there. You've added 30% onto your trading account. $5,000 trading account. I mean, I don't even know what that is. I don't even know this. That's like $1,500 right there. Easy. Depending on what leverage you use, of course. All day long. But it's just not doing it today because you already know why. Because Jerome's coming up. But ordinarily, me and the ALC crew would be in this trade. Uh-oh, I just got rid of my fib. I don't really need that fib. It's mitigated. But I keep it on here. So that later, if action gets fast, I'm like, oh my gosh, where's the fib? And we got 786 below in our box. Guys, I'm about to take this jacket off. I'm sweating. Anybody else take this trade? Anybody fool with this? Anybody fool with this? A little crazy price action. Give me 1 second while I take this off. Let me slide out of camera here. All right, we're back. Somebody let me know if they took this trade. We didn't take the trade. We did not. It's not what I'm looking for. I'm looking for Jerome here in about 6 minutes. Let's see if I can find him, get his stream ready. All right, I got it pulled up, guys. He's not going yet though, but I do have it pulled up. John's staying way out of that for now. Me either. Guys, don't worry. I'll be here to walk you through it. And listen, I know this is not going to instill a ton of confidence in you, but I've been wrecked on FOMC days. You just can never tell. Like, let's say that Jerome comes out right now and says something good, and it goes to here, and we're like, oh, hell, we're going, 100K, here we come. The very next sentence out of his mouth can be like, screw all of y'all, we're raising rates. And you're scrambling to get out because he was so dovish, and then all of a sudden he drops that big hawkish hammer on you. So you never know because he could say anything. But I'm telling you, it's not the way it used to be to where this thing would just rip through anything. It's to the point where, yeah, it can be pretty volatile. This is no man's land. There's no real liquidity here. There's no real support or resistance. It can bounce around here all it wants, but it does typically respect these bigger support and resistance levels. So that's what we're waiting for. You could be chopped up. If we went to the 1 minute, this is Chop City. Look at this. Look at this. This is just everybody. Everybody stopped out. Anybody running a tight stop here? Stopped out, stopped out, stopped out, stopped out, stopped out. And then you're getting eat up in fees. And it happens so fast, you're getting slippage. Just a few more minutes, guys. We're going to watch Jerome live. Pretty cool about that 10-day BBWP, the volatility metric, right? I think it's pretty cool. Guys, before I forget, we're going to do a beginner to an intermediate workshop a week and a half from now on Sunday. You can go here, anthonyleecrypto.com/worksheet. Go to the website, Anthony Lee Crypto, and there's a tab up here at the top for workshop. It's only $25. That's it. It's 2 hours. There'll be live Q&A on Zoom. You can ask me whatever you want to ask. I will have pre-planned criteria, but we'll go over whatever you're struggling with, whatever you need help with. And I've put a money-back guarantee on there that if you're in my VIP Discord, you don't have to be in the Discord to join this, by the way. But if you are, right after that, the very next trade that I give to the Discord, if you take it with at least a $500 trading account with the parameters that I set, and you don't make at least that $25 back, I'll refund it to you. Plain and simple. So it's no risk to you whatsoever. But it has to be with a $500 trading account. You can't put $1 in there and expect to make 25x on one trade, make $25 when you only put up $1. So we got to make it a little somewhat fair. My crew, my VIP crew can tell you we make a lot of money. We make a lot of money. We make a lot of trades, and I'm not bragging. I will never brag. I will always keep it real with you. I'll let you know. I show my losers. Had a loser last week. I showed you guys. I almost had a loser this morning. A few more minutes for Jerome. Here's our Discord, by the way. Here's where I get my trades, my setups. I told him this morning I took an aggressive long at 91.9. I closed this at 92.4, I think. Very small. It just wasn't doing anything. It was bounced between 91.5 and 92.5. And just coming into FOMC, I just wanted to get out of it. I just wanted to get out of it and start fresh at FOMC. No real reason. I just wasn't comfortable in it. I showed the $100,000 WorldCoin trade we did the other day. We're up $2,000 on that. I showed this. This was a spot trade, $100,000. That's actual money. That is not with leverage. That is a Kraken account. Showing the trades. Anyway, this is where we get it done. A little small. This was a Scalp 511. Yes, this was an early morning. Just Scalp, quick $160. $98,000. Anyway, this is how we do it. I give them all the scalps, all the swings, all the setups. I give my charts. Get all the charts out there. Go join us, guys. Free Discord. Join the VIP Discord. Get all of my trade setups. Questions. You got to have some questions. Pat Phemex. Love it. Love it. Love it. Love it. Love it. That was my college nickname. Just kidding. Babe, if you're listening, I'm just kidding. Love it. Wow. Somebody tell me something good before Jerome comes out and tells me a whole bunch of bad stuff. These are the levels we're looking for, guys. If you're looking to take a trade, go ahead and put these levels on your chart. Looking for the first area to come up here into this golden pocket /786 from our top yesterday to the low today. There's a lot of liquidity there. We could go over the heat map. Let me refresh this. I may have just swiped through some of this. So this first target is around 93.5-ish. Okay, 93.5-ish. Which you can see right here, that's this big yellow spike at the top. And it really goes all the way up to 94, 94.1, somewhere in there. But 93.5 is the biggie. You'll probably come into here somewhere. And down below, you can look, we got 91.4, and below that all the way down to 91K. You got some more down here all the way down to 90K. So 94.5 and 91K-ish are areas. And we got those marked out. We got 91 right here. We've already mitigated this 618 twice. We've bounced from it, front run in here, bounce from in here, bounce from in here. We'll probably fall right through it, hopefully find support right here. I like the area down here lower better. Okay, we've got more. I don't have them on a chart right here. I'll throw them on real quick. We've got more confluence right there. If we're lucky enough to get this $90,000 trade, I'm going to go heavy on this. Let me show you what we got down here. Besides the golden pocket from our low here, okay, we got our monthly low to our top yesterday. This is our golden pocket. We've also got, boom, daily naked point of control. Daily naked point control. We got a weekly there also. It's not showing up. Where is it at? There's a weekly down there too, guys. I don't know why it's not pulling up. I probably moved that into the wrong box. There's a daily and a weekly right there. There's a daily here, a daily there, and there's a weekly right here as well. So there's a daily and a weekly naked point of control in this box. So that's what I would like to see, that area. Let me throw on my weekly real quick. This is bothering me. There it is. There it is. It's a little bit lower. My fault. No, it's there. It's there. I don't know what happened to my chart. There it is. I have it labeled wrong. I have it labeled as daily. I'm on the weekly time frame. Turn on. This is actually a weekly naked point of control. Anyway, regardless, this is the area that we want, guys, right there. It is a weekly naked point of control with the golden pocket. This is what we want. I knew there was a weekly there. There, all better. No questions, just waiting. Yeah, we're waiting. We're just killing time. Thanos, West Coast, LOLing. You're LOLing at me or Pat Phemex? Pat Phemex, where are you from? Where are you from? What area of the world are you in? What a great name. So, guys, these are our levels. I'm not taking this blindly. This 91.1 to about 90,900-ish. I'm not taking this blindly. I would want to see some good bear divs here, okay? I would want to see price come down into here, right? Lower low. And then I want to see this roll over, something like this. And so you got some bullish momentum. But I would still wait for a reaction here. Sorry, guys. I'm checking a few things out. I'd still wait for a reaction here before I took this trade. Because right below that, we've got our other better box of confluence, right? Got the 618, got the weekly naked point of control. We've also got the value area low of this range coming in there. And if you look at this white line that I've got on the chart, see this white diagonal line? That is this trend line that we've just broken out of. You can see it better if I put it on a higher time frame, but you can see we just broke out of this multi-month trend line. We've been in it for, I say multi-month, 2 months. Been in it since first part of October. We just broke out of that. So if we could come down to that, you get the weekly naked point of control, you get the 618, you get the value area low, and you get a back test of this breakout and go. This is the ideal trade, guys. And don't think we can't get there with this press conference. That is only a 2.5% move. And I showed you in the first 15-minute candle when Jerome opened his mouth last time, we got a 2% move. So very doable, okay, guys? Probably what would happen, if I had to guess, you come down, do something like this, come down here, come to this box, get a little bounce, probably back to the point of control, maybe the underside of the 618 here, and then you would come into it, create triple drives of bullish divergence, and then go. So look at this is a reaction trade here. This is a blind trade for me. I know that's bad. Professional traders shouldn't do that. There's just enough confluence here. I will blindly enter along here with my stop. Okay, I will have my stop in place. You've also got a CME gap just below that. So a lot of stuff there. Blind long for me right there. All right, a couple more minutes, guys. We're going to pull it up on screen here. Anybody got any questions or want to see anything before we jump over there? Let's take a look at the poll. Is Jerome going to be hawkish? 89% say he is going to be hawkish. I concur. Anything you want me to look at real quick before we jump over? Got a few more minutes. They're usually pretty prompt with this stuff, guys. And I'll be quiet. If I'll be quiet. We might minimize him a little bit if I can figure out how to do that. And try to look at the chart while it's going. We don't really need to see him anyway. We just need to see what kind of reaction he's causing. Yeah, we'll do something like that so we can watch price action. So I'll be a little quiet whenever he's talking because I know you guys really, really, really want to hear what he has to say. But I will speak up if something needs to be said or if price gets to one of our trade zones and I decide to take the trade. Otherwise, I'm just going to kind of let him talk, okay? Cool. But if you have questions, feel free to ask them, and I can type. I can always type on the chart if I have to, if I don't want to talk, because I know a lot of you want to hear what he says. FX is good. Nope. Nope. John says nope. Okay, well, good deal. We're going to get rolling here in just a couple minutes. Everything looks good. Price is literally right where it started. Right where it started. So it did all this. Look, guys. Look at this. Look at this. Had a low, had a high. Liquidated that low, liquidated that high. Boom, boom. Very predictable. But not our trade. Not our trade. A good trade, but we didn't take it. Not our trade. All right, we got 1 minute, guys. 1 minute. Jerome is getting replaced, Thanos. Yeah, I think in March. I think it's in March. His time is up. Trump tried to fire him. I mean, he can't fire him, but he threatened to fire him a bunch, even though he didn't have the authority to do so. He was hoping to pressure him into quitting, but I'm telling you, man, they're in a massive pissing contest. So Jerome was going nowhere. He was hoping to... Somebody let me know if we get going into this and Jerome's talking, if the music on the stream is too loud. I can turn... Here we go. Here comes the man, Jerome.
Prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. Some key government data have yet to be released. Available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well and should be used when delivering on these goals matters to all Americans. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission to support effective employment, bringing our inflation sustainably down to our 2% price stability goal, and keeping longer-term inflation expectations well and should be used.
Thank you, Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extended timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline? Howard Schneider with Reuters.
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate the incoming data. The adjustments in September, I would note that having reduced our policy within a broad range of estimates in September, and as we noted in our basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the two official dissents against a cut, but there were also soft dissents from four others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our two goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and you know, it's very unusual to have persistent tension between the two parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and you know, we come together and we reach you know, a place where we can make a decision. We made a decision today. We had, you know, 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, you know, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and, you know, the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in you know, inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to, you know, the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire. Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward. Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. But, and after that, again, if there
Let's pause Jerome for a minute and kind of go over what that beeping was. He's not saying much anyway.
And I wanted to see if I could address sort of the elephant there. The president's been talking openly about.
I'll keep him really low here. Can you guys hear me? I want to kind of go over this real quick. This could be good. So we are. Can you hear me? Can you hear me? Can you hear me? All right, guys. So I got Jerome in the background. Let me know if it's too much. I can turn him all the way off, but I do want to discuss what we just had happen here. So we just had a 4-hour candle close and open. That's what my beeping going off was. We got the wave cipher B green dot just hit. Right down here, you can see it on the wave cipher B. This is not the popular indicator. This is my indicator that I created. You can get this as part of the Discord. Go to our Discord right now, link in the description of the video, link in the description of the channel, join the free Discord or VIP Discord. Either one will get you this indicator. But we got the 4-hour green dot. There's a video I put out on this you can watch on how to use it. Super simple. We're going to walk through it. 4-hour green dot. Now we're moving around. We got a little wiggle room here, guys. There's a lot of shorters, a lot of longers, a lot of nonsense. And believe me, they're going to get them both. But we did get the 4-hour green dot. So do we just take this blindly? It is unconfirmed. It just hit. So it could easily disappear. But let's look and see if we have our 3 metrics, guys. So what are we looking for? We got the 4-hour green dot. Okay, so we're looking for longs, right? That should be our mentality. Well, what do we look for? The 3 check marks here are number 1, king, money flow, headed up. Yes, we got money flow headed up. Okay, so that's 1 of 3, okay? Second thing we look for is momentum waves headed up. These blue waves here, are they headed up? Yes, it was coming down. Look, it just pinched, just clipped, headed back up. Third thing we look for is this white line. It's the stochastic. Is it headed up? Yes, it's headed up. All 3 of our metrics are headed up. So this is a good long trade. Do we just enter here? It's tough to say because it's FOMC. Normally, I would probably just fire off a long. I'll drop down to a lower time frame and see what we got. If we have a good entry point, we're in a little bit of a symmetrical triangle. This actually looks a little more like a rising wedge to me. You might could draw it like this. I don't really like that because I don't personally. I don't. Some people might, but I don't count this wick right here. This was the report release. So if you take that out, then everything here is pretty much at a symmetrical high. So we should be breaking to the upside here, guys. This is a good possible long area. Now you could wait on a pullback, pullback and go. You could also come mitigate these lows here. You could take these lows, something like this, boom, boom. But we are looking for some upside here, guys. We got the 4-hour green dot with our check marks in place. So, hang on one second. Let me flip over to my trading account real quick. Sorry, guys. I had this all kind of tucked away to the side while we were doing Jerome. Somebody let me know in the chat. All right, let's see. Okay, good. Hawkmore says sounds good. All right. All right, good. Okay, guys, so not a whole lot of price action going on, but we do have good news on that 4-hour. It looks good, guys. It looks really good. I'm not going to lie. It doesn't mean we can't come down a little bit in the next few minutes, but this looks good for a breakout, guys. At least to come up and take out this high, and then we'd reevaluate, but it looks really good, guys. Or a pullback continuation trade, either one. But as it sits right now, we're looking for longs. We're looking for longs. We're at the point of control, and the value area high is right above that. So we are at resistance, guys. We're at resistance. All right, guys. Anybody jumping a trade? How are we looking, guys? Somebody let me know. Somebody let me know how they look. We're long. We're long, guys. We're up 68 bucks. We're long. We are long. $65,000 trade here, guys. We're long. Up 100 bucks. 100 bucks and climbing, guys. We're long. Thanos, if you're still here, we long, brother. I'm going to let my VIP Discord know real quick. I'm just going to type the word long. $175 up, guys. Oh, you gotta be kidding. Come on. This is my last trade ever on Phemex, guys. I'm just letting you know right now. Uh-oh. I did not mean to do that. Oh my gosh. Sorry, guys. All right, we're up over 400 bucks, guys. Did y'all take this long? I just gave it to you, and I walked you through it, guys. Did you take it? Did you take it? Somebody tell me something good. Somebody tell me you took this trade. Thanos got in. Dude, it's getting a little volatile. Make sure you're running a tight stop loss. We're coming into that first box. Look at the chart. We're coming into that first box of resistance. So we could reject here. I like it, but we could come and it's harder to predict today because it is FOMC day and things are about to get crazy. But it could do this number right here, Thanos. So watch out. It could come boom, boom. Okay? You want to make sure you lock in some profit, get that stop loss in, at least at a break even. Cat's in it. Thanos is in it. John's in it. Guys, we are live trading. Where are we at, guys? Let's look at a trade. We're up 400 bucks, just like that, guys. 400 bucks, almost 500 bucks in just a few minutes. I'm not going to play with it. I'm going to put a stop up here pretty high because we could easily come retrace this. I might get stopped out here, and that's okay because this is not the area that I really want to trade. I'm trading this based upon our wave cipher B that just fired off, guys. So if I get stopped out here, $400 up, that is cool with me. And I did. $400. Guys, I know a lot of you want to see the $10,000 trades, and that's great. We get them. We get them. I show them. Guys, this is 3 minutes. We made $400 in 3 minutes. $400 in 3 minutes, and I walked you through how Wave Cipher B gave us that. Okay? I walked you through how Wave Cipher B gave us that. Okay, so now, this is important, guys. What I'm looking for right now, sorry, trying to pull you guys up. I lost you. All right, what I'm looking for now, okay? We could blast right through here and I could miss out, but I don't think so. What I'm looking for now is a pullback continuation. We still have the 4-hour green dot. It's still bullish. It still looks good. It's FOMC. Everything's janky. Looking for a pullback continuation. I'd like to see probably a 382 here. Something like that. Like a 382 pullback here. Somewhere around 92.8. Where's my 0.5? I'm going to watch for a reaction at these levels. I'm not going to blind enter. And I know we're moving up, guys. Coming into 786 now. We could come up to this upper box. And you know what? I don't care if we do. If we come up here, yeah, I got stopped out. I made $400. Thanos made a quick $80. Good job. If we come into here, this next box, I'm going to look to short. I am not shorting this box. We got a little momentum. I think we come for this liquidity above here. The big daddy trade is up here. You see all of this, guys. You see all this confluence. This is the big one. If we come into here, I'm heavy long or heavy short trading. Heavy. If we come here, I'll look for a reactionary short trade back down to one of these levels for a continuation trade into our big box. This is our target. Let's see where the daily 55 is. Let me go to Lionheart, guys. Daily 55 is right there at 97.5. Let's go back. 97.5. Right here, right in the heart of this. Right in the heart of it. Right there is daily 55. That is our target, guys. That is our target. We're going to look to short there, most likely. Quick $400. Looking for this for a hopeful pullback, guys. I want to pull back because I want this. I want a short trade here for another $400, and then I'm a long here for $4,000 trade, give or take, okay? That is what I want. That's what I'm looking for, okay? Showing you how I walk through this stuff, guys. Good job, Thanos. Banking that $80 in 3 minutes. Okay, I know you probably got to go soon. You got work, but that sucks because you might miss out on this short trade. You can make another $80, and you can make it $500 or so going up here. I'm going to give you these in the VIP. I didn't have time a minute ago. Look at this. I just put long. Long. That's all. Usually I put it. Tell you why. I'll screenshot it. I literally just put long. It happened so fast. And we're on live, and you guys in the VIP should be on live, and shame on you if you're not. Moving on up, guys. I want this short trade right here. I want this short. I want this scalp short. Breakout, retest, continuation, guys. Yeah, there you go, Thanos. Be careful with that. You may be good at it. Some people are really good at phone trading. I'm bad. I get in a lot of trouble. I get a lot of trouble trading on the phone. Can't see the chart. But if you're just taking a trade, that's cool. But I try to chart and trade at the same time on the phone. And I'm back and forth. And I just get in trouble. I'm not too tech savvy. But if I were just taking trades, that would be cool. Good trade, guys. Waiting for the next long? No, yeah, but no. Wait for the next short. Get them both. Get them both. We can't long from here. We can only back test and then long. So, but I get it. If it's too much, just wait. We'll get it back. We'll get a pullback. This thing is not fixing to rip up to $200,000. We will get a pullback, and we'll be there laying and waiting, guys. We just nailed this one. It's still going. We could have made more money. And for those of you who don't understand how we trade, normally I would not have let myself get stopped out in $400 profit. $400 is great, okay? I just showed it. Normally I would not have done that, but it's FOMC, and this sucker can turn around like that. I mean, right here, you did this candle right here, this red candle, 93.2 to 91.5. You did $1,000 wick right here in 5 minutes. Okay, $1,000. So any other day, I'm just going to let this sucker run, stop loss at entry, and just let it go. FOMC is different. So we'll see, and that's okay. If I can make another 400 on this trade down and then hit a my phone's blowing up. Too many people follow my channel, have my cell phone number. Everybody's like, hang on, I'll read you a couple of these. Up $720. You the man, up $300. Riding this up to 100K. Got 3 messages back to back to back. Crazy, guys. Love you guys. Good trade, y'all. Good trade. Max up $600 right now. This thing is climbing, guys. I had an alert set so I could be ready for this wick. That is my alert set. That tells me to tune into the chart because we are close to taking this liquidity, close to my box. Champ. Notice how we didn't take this trade right here. It came into the box. I didn't even try it, guys. There were no divergences. We just got the 4-hour dot with all of our metrics. Guys, I know some of you, Thanos, I don't know if Joe, you're still with us. Kat, I know y'all have this Wave Cipher B new indicator. I know you do. I think you do. Did that make sense? How when we got that dot, I just broke it down for you and showed why we took that trade. We did not wait for the pullback. We just took it because our 3 metrics lined up. I would not have blindly taken that if only 2 out of 3 lined up. I would have waited for bullish divergence on a 3 minute or 1 minute or 6 minute. But because all 3 lined up, it was time to go. Come on, a little bit higher. A little bit higher. I'm waiting. I'm laying in wait, baby. I'm right here laying in wait. I want to short right here. If we get past this, but it's a daily naked point of control right above it right here, guys. 95.2. If we get past 95.2, we're going to 96.2, and we're going there in a hurry. Makes total sense, Kat says. If we get past this daily naked, I don't think we do. Not on FOMC day. Too many people are longing this right here. I would look for retest continuing. Let me clear some of this stuff off. I would look for retest continuation. You got the 382 coming right here at the value area high. Why do I have 2 ranges on here? Why do I have 2 ranges? Get off of there. Oh, okay. One's a macro range. Okay, so we got 382 coming in right here at the value area high. I think we're done with Jerome, right? I think we got the point, Jerome. Thank you, sir. Thank you for that $400. 600 for Max, 80 for Thanos. Kat, how did you do in this trade? You said you got into. Are you still in? I hope you we're coming back, guys. We didn't take this high. I don't like that. I don't like that. Well, one area I don't like it. On another hand, it means we will come get it. So that's a good target for a pullback continuation. We will come take this high. We're not going to front run like that. That is well past the 886. We will come back for that, guys. Maybe today, maybe in the next few minutes. We're retracing this. Look at these vectors. I got you guys in my Discord know I'm a vector guy. Just recovered this vector fully. Got another vector here unmitigated. We at least get 50% of this. Kat didn't put a lot of money in, but she did make $40. There you go. $40. That'll almost pay your VIP membership. Send it over. I'll take it. We'll add another month on. Oh, we just took half the vector. I missed that. I think we come lower. I think we come into this, at least this 382. At least the 382. Switching down to the 1 minute. We do have a vector, 1 minute vector down here. We could come in right in here at 92.9-ish. This would be great. This 93K right here with a point of control. Come in, mitigate this 1 minute vector. It's the last vector. All the rest of these have been taken at 1 minute. Yeah, I lied. You got one right here. We don't have to get that, though. This is a good one. If we could come get this, look at this. Look at this. This was the, I told you we were in an ascending triangle, right? I told you that a minute ago. So we're fixing to break this ascending triangle. You see it? Right there. Right there. Okay, look at this, guys. How perfect would this be? Here's what you want to see. You want to see a little 618 retrace right here, something like that. There to there. A little change in market structure, okay, guys? If we come up with this anywhere in here, the 618-ish right in here and reject, we could come down, hit a little back test of the breakout like this, right into the 382, a back test of the breakout, and then come into our good stuff up here, okay, guys? This is what I would like to see. I hope you guys are understanding why we're looking for this. Breakout, backtest, continuation. Recovery vector candles. 1 minute vector candles. Got one right here, unrecovered. They need to get it. This is the trade we're looking for. We want a reaction here, though. I'm not just going to blindly take this trade. I'm going to get a reaction. I might even wait till we get back above this value area high right here, so you may lose a little bit of profit. But I'd rather have that than come hit this, bang our head there, and then come down. So it's all about your risk tolerance. Me, I'd probably just long it. But if I'm live with you guys, I want to show you how to do it correctly. Let's get a pull. Gosh, that means I have to take another Phemex trade. I'm on MEXC, guys. Description's down below. Use the link. Here we go. Coming into it, guys. Let's see if we get the reaction. Let's see if we get the reaction. See if we get the reaction. Pretty close, pretty close. I'd like to come touch this 0.5. I'd really like to touch this 0.5. I don't like front running because we already came through the 382. I want to touch this 0.5 and see a reaction, guys. Let's see if we, from the breakout low. Uh-oh, what did I do? I did something. From the breakout low, this last little wick low, that'd be the 786. So we got 786, we got 382, very, very, very small time frame stuff. If we reclaim this value area, it could be a good trade. I would like to see a dot, at least on the 1 or 3 minute. Flip over to Bjorn. Let me move Bjorn over here so we can check our stochastic on these low time frames. Still headed down on the 1 minute stochastic. Hasn't curved back up yet. No trade, guys. No trade. So we got any order blocks? Let me clear some of this. Let me see if we got any order blocks. Low time frame. Yeah, we got a bullish order block. This is our trade, guys. So we can come down to this bullish order block. Got the 0.5. There's the local 0.618. There's the breakout retest continuation. Point of control right here. This is the area, guys. Get right down in here, 93, 92.9. This is what we want. That's what we want. I'd like to hem haul around here for a few minutes, okay? him haul around here like this for a few minutes before coming into it. That way we can create some bullish divergences on momentum waves on wave cipher beat. Hey, then we'll have continuation with our 4-hour green dot to the upside. Good, possible good trade coming up here, guys. This would be a no-doubter for me if it weren't FOMC, by the way. FOMC can wreck everything. It's not even the FOMC. It's not even Jerome's fault. It's all the folks out there who don't know what they're doing, just trading blindly and with high leverage and no stop losses. Just begging for the market maker to come liquidate them and ruin everybody else who's using proper trading techniques. But hey, without those guys, we wouldn't be able to make a living, right? Couple of good trades today. So we were up 19 coming in. We just secured 400. And I know we could have gotten more, but this is why we took profit. This is the beauty of FOMC. So we're up $2,300 on the day, guys. $2,300. Now let me let my Discord know. Y'all surely are on the stream. Stopped out. $400 profit. Looking for pullback. Let's see. There you go for you doubters. It's a trade we just took live on stream. I showed it as it was ticking up and ticking down. I showed my stop loss, got stopped out. $400 trade. Made $400 profit. Not too shabby for 3 minutes worth of work. Moving back up a little, I'm not convinced. We do have a 6-minute vector here. Could recover half of this. Hopefully come back down to this order block, guys. Love to come back down to that order block. Order block extends into the 618. This is my next trade right here, guys. Let's delete that. It's gone. I'll show you what I'm looking for, guys. I am looking for divergences and reaction, though. Okay? So probably something more like this. Probably come into that order block just a hair. We could hit the top of it. You could extend this, depending on your risk tolerance. Because we front ran this high, let's see what that would be. Let's see what our risk to reward would be. Start at the top of the order block. And take that high. Okay, almost a 4-to-1 risk to reward. So yeah, this is our trade setup, guys. That's what we're looking for. That's what I'm looking for right here. Let's get that off. That's my trade setup, guys. Take this 382 off. I don't want 382. You could bounce at 382. I don't want it. If we bounce there, I miss it. This is what I want, guys, right here. Maybe even a little higher. See what we got on the back here. Probably come, if we come up there, we probably come take this high here. What is that? 94.9. That we probably come take that. So something like that, guys. You're at over a 4-to-1 risk reward. It could give you a little more leeway here if you wanted to kind of jump in this trade a little sooner. You could pull it up. You can pull this down, just hair recover that vector fully. I'd probably go, I like a 3-to-1 risk reward, so I'd probably go something just like this, guys. So my next trade, guys. but I'm not taking this blindly, not on FOMC. I want to pull back. Bearish divergences on at least the 6-3 in 1 minute, maybe even the 12, depending on how fast, how long this takes to develop. And I want a reaction. But I have the confidence because we're under the 4-hour Bjorn. Right? Here we go. 4 hours. We're still volatile up here, right? Stochastic point to the upside. Well, volatility is headed down, but it is still in extremes. Okay? Looking for a big move to the upside. 4-hour green dot. Got our 3 metrics. Momentum headed up. Stochastic headed up. Money flow headed up. Price headed up. Now we're just waiting for that entry. If we're gonna get the pullback, we're gonna get it here pretty soon. If we're gonna get the pullback, probably gonna get it right here. You could technically come SFP this high one more time. But for a better trade, if you SFP the high, if you come take this high one more time, especially if you come into our box, if you come take this high, guys, I would look for a double top pattern to the downside. If you come into this box, I would look to short. If you come into the box before you come down here, okay, if you come into this box before you come down here, I would look to short. Because what you're going to wind up having, most likely, depending on how long it takes, you're going to come here, boom. You're going to wind up with some divergences, higher high in price action. You're going to have something like this, lower high momentum, bearish divergence. But I don't think we're going to get that. I think we come to this order block. I'm ready for it. I've got my last time ever with Phemex account pulled up. We are partnered with MEXC now. The partnership is already unrolled. The link for your free goodies and free money and lowest fees is in the description of the channel. Also on my Discord, also on AnthonyLeeCrypto.com. So this is my last day with the Phemex. Had the value area high now. Find a little support. I don't think it holds. What do we got? Anybody here still in this trade? I know some of you took it. I see my phone is blowing up. VIP is blowing up. Discord is blowing up. A lot of people caught this trade with me. Good job, guys. We're going to hang out here about 5 more minutes to see if we get in this trade, and I'm going to let you go. But if we get in it, I'm going to walk you through what I do. But again, guys, on FOMC especially, I wouldn't just set a blind trade here. I'm looking for my divergence. I'm looking for my reaction. What would that look like? Come down, take this low. I don't think we'll get it. Oh, we had it here. I didn't see it. I wasn't watching just a little 1 minute though. We did have the bull div here. See, lower lows, higher lows. Didn't get much reaction though, so good no trade. Not yet. Anyway, you could still continue on, but not so far. Any more questions before I get out here, guys? We've been streaming for, gosh, dog, how long have we been going for? Long time. I don't even know how long. What time is it? We've been on stream for almost 2 hours. Subscribe to the channel. Join the Discord. Get this wave cipher B indicator free. It's a private indicator. You cannot search for it. It is only available by link in my Discord. Look for a reaction at the 618 here coming up. See if we get it. Salt chain, no questions, but look for your trade in Discord. Yeah, you know I'll post it. I always do. I always do double top in here. Not a double top. I mean, extreme 1 minute local double top, not even the big one. We're going to push up. We should take this and this at least. Come to the 618. I don't see any good order blocks here. I think we push up into this box. I doubt I take a short here, guys. Unless we take this high. If we take this high, I'm going to look for a short. If we don't, and we just come to the 618, I'm just going to look for the retrace, continuation long. Doesn't mean you can't make some money on this short. It's just not my setup. It's not what I like. We'll see if we come down in this next candle or two. Here we go, getting a little blood diamond on the 1 minute. Uh-oh, blood diamond. You guys know what that means. Good thing it's only on the 1 minute, right? Let's see. Look at that. Already bouncing back up. Hell of a blood diamond. 1 minute blood diamond. Gotta love them. Money flow coming down on the 1 minute though. We should come down. Should come down into this box. We should come down to the order block. Should come down there, guys. That's where, if I were you, that's where I'll be looking for my next trade, rather. Try to find one more thing for you guys. Blood diamond's back on. I'd love to come swoop this right here. Swoop, swoop, swoop. Right into our order block. I don't really want to come take all of this. You could, guys. Look, hey, if you get down in here, if you lose this 618, guys, if you lose this 618, be prepared to come for this low right here, okay? That could happen. But I showed you the 10-day BBWP versus stochastic. We are looking for some major upside price action for Bitcoin, guys. Major. I want to show you one more thing, guys, before I let you go. I put this short out in November. Real quick, guys. Hang with me. I want to show you that this is what we call for here on this channel and why you need to join us. Every month, I give you the historical price action. Now, historical price action does not guarantee future performance. Let me mute this guy. All right, so, but I tell you kind of the highs and lows historically of Bitcoin, wicks, closures, what date they close on, and we try to see what we can predict as far as performance. And look what we predicted. Boom. This was on November 30th, okay? December opened up negatively. We had a box at 84K. Where did we come, guys? I don't even remember where we came. Where did we come to, guys? We had it at 84K. What was the low? What's the low, guys? Anybody tell me the low? I don't even remember. They run together. Right here, here's the low. 83,760. We had a box at 84K. That's what we called for. Boom, move down to there. I told you within the first 5 days of the month we will get there, okay? And that's exactly what happened. What day was that on, guys? What day? That was on the 1st. Told you in the first 5 days. And then immediate move to the upside, okay? This is what the historical price action shows what happened, okay? And that's exactly how it's playing out, guys. That is exactly how it's playing out. That's exactly, guys. This is how that would have looked. Right here. Boom. I put this on the chart on November 30th. Price was right here. And I said, pull back to there and go. Okay? Short is out there. The long form video is out there too. If you don't believe me, go watch it. Get some context of why I think that and where I do think we're going this month, guys. Everything's lining up. You even get a bit of an ascending triangle here too, guys, now that I'm looking at it on a little higher time frame. See it here? We're trying to break out of it right now. I mean, right now. Look at this, guys. I know it's roughly drawn, but you get the point. Trying to break out of this sucker right here, guys. Need to take this high. Need to take this high. Look out for an SFP, though. If you take the high and come back, it's a good short trade. You can still come down in here, dilly-dally around for a couple days before a full breakout. I'll keep you updated in the VIP Discord, guys. Thanks for coming in. Thanks for joining us. We enjoyed it. Good trade. I know several of you took it. Good job. Good profit, guys. I'll keep you posted in the VIP Discord. Come join us, guys. Love to have you in there. See ya.